Hello and good afternoon. I'm Holly reporting to you live from Kalkine Studios, and it's lunchtime here in Sydney. That means it's time for the mid-market pulse. In this show, we'll be taking a look at the overall Australian share market performance by the mid-session trade, and also we'll be exploring the biggest winners and losers of the day. Then lastly, in our final segment, we'll be focusing on the stocks that have grabbed headlines today. So without further ado, let's get started. While the Australian share market continued to trade higher by the mid-session, albeit reversing half of the early gains, supported by buying in mining, banks and tech stocks. The surge in the commodities price, especially base metals like alumina and nickel, also lifted the market. As many as 6 companies are trading ex-dividend today, including some big players like WiseTech Global, Cleanaway Waste Management, Ariende Australia, Argo Global, and the benchmark index ASX 200 was trading higher by 0.29% by lunchtime. The Aussie market opened high today, undermining weak cues from Wall Street and gaining as much as 0.8% to hit a high by the mid-session trade. Overnight, however, the US stocks ended lower after weekly jobless claims dropped to a near 18-month low, igniting fears of a slowly economic recovery. The data released by the US Labor Department showed that the new claims for state unemployment benefits fell 35,000 to a seasonally adjusted 310,000 last week, the lowest level since March of last year. Reacting to the weak macro data, the Dow Jones Industrial Average fell 0.4%, the S&P 500 slipped 0.5%, and the Nasdaq Composite fell a heavy 0.25% as well. Back home, 9 of the 11 sectors were trading in the green, led by a 1.4% gain in the materials index. The sector reversed previous session losses despite a continued fall in iron ore prices, which fell a 2% per tonne in the overnight trades, as China curbs the steel production. The materials sector was followed by IT, which rose 0.6%. Among others, energy, consumer discretionary, financial utilities and industrial sectors were also trading higher. Bucking the trend though, the healthcare sector witnessed Sure in selling with a loss of 0.9% by lunchtime. The A-REIT sector also traded lower with marginal losses. On that note, let's now focus on the top gainers and losers of the day by the mid-market session trade. Well, the top gainer on the ASX pack was Alumina, refining and bauxite mining firm Alumina with a 7.3% gain. The stock surged after aluminum prices hit a 13-year high in London overnight. Some of the other notable gainers were mining firm South 32, nickel producer Nickel Mines, resource mining company Iluka Resources, and G.U.D Holdings, a distributor of automotive, filtration and other service parts. Meanwhile, Australian law firm Omni Bridgeway topped the losers chart for the second day. The stock was down a shocking 6.5% after falling 8% in the previous session, after it was issued an update on the Wivenhoe Dam flood case. The company said that one of its Brisbane floods class action targets was found not liable in a court decision. While some of the other worst performers included software developer Iris, tech firm Appen, financial services firm Magellan Financial Group, and telecom service provider Chorus. With that said, let's now shift our focus to the shares that grabbed headlines today. First up, shares of Australian energy majors Santos and Oil Search have entered a trading halt this morning. The duos have entered into a definitive agreement to merge the two companies in an all-scrip transaction, and following the merger, Santos will own about 61.5% stake in the merged entity, while Oil Search will hold the remaining shares. And the next big news comes to us from Qantas, whose shares rose nearly 2%, as Australia's largest airline plans to make COVID-19 vaccines mandatory for international flyers. The airline's boss has confirmed that only vaccinated passengers will be allowed on international flights. All unvaccinated passengers will be banned from flying internationally on Qantas planes once overseas travel resumes, according to the company's CEO, Alan Joyce. The airline will mandate COVID-19 vaccinations for all passengers flying overseas as the airline gears up to relaunch its international routes by Christmas. This news comes after Qantas announced in August that it would require all employees to be fully vaccinated against COVID-19 by the 31st of March 2022, with frontline employees to be fully vaccinated by the 15th of November this year. Joyce's comments were made at the Trans-Tasman Business Circle on Tuesday, and he said that Qantas will have a policy that international will only be carrying those vaccinated passengers. Now it's time for a small break, but stay tuned on Kalkine TV because I'll be right back with more trending updates from the Australian share market.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back, I'm Holly and you're watching the Mid-Market Commentary. Let's have a look now at some more trending updates from the midday trades. While shares of financial services software maker Iris were trading 1.8% lower after the company issued a business update. Iris is granted an additional 10-day period to its takeover suitor EQT Fund Management to undertake due diligence. Last month, Iris had received a confidential, non-binding and indicative proposal from the Sweden-based private equity group EQT to acquire the company via a scheme of arrangement. The company had provided 30 days to complete the due diligence process, and the enterprise value of the deal was estimated to be at $3.2 billion, at an implied value of $15.91 per share. Next up, shares of smash repair company AMA Group traded flat after it unveiled a plan to raise funds. The company, a leader in the automotive aftercare and accessories market, plans to raise $150 million via non-renounceable entitlement offers, as well as secured convertible notes. It'll raise $100 million via a 1-for-2.8 pro rata non-renounceable entitlement offer, and will raise another $50 million by issuing fully underwritten senior unsecured convertible notes. The capital raised will be used to permanently repay the $72.5 million in debt facilities, and $69.3 million will be used to meet working capital and liquidity needs, as well as to support growth initiatives. AMA Group is the leading collision repairer in Australia, repairing vehicles for major insurers across 178 repair sites in Australia and New Zealand. Moving on now, shares of biotech firm PolyNovo traded marginally lower after its chief operating officer resigned. The company, in an exchange filing, said this morning that Anthony Kane had resigned from his post and had originally joined PolyNovo from its rival firm CSL, and is now returning to the healthcare major in a more senior position. Chief Executive Paul Brennan said Kay has played a key role in completing and commissioning the company's new manufacturing facility that'll make the hernia product and increase its capacity to make biodegradable temporizing matrix. Moving on now, and the share price of online furniture retailer Temple & Webster rose over 1% after an exchange data showed that its CEO sold shares worth $1.4 million today. The CEO, Mark Coulter, offloaded over 100,000 shares in an off-market trade. The company, however, had not given any reason for the share sale. Well, moving on now, Resolute Mining shares climbed 0.5% after the company reported $30 million of voluntary debt repayment. The company informed its shareholders this morning about the early voluntary repayment of an additional $30 million on the company's revolving credit facility. The repayment was made from the first installment of proceeds received on the sale of the Bibiani gold mine and brings Resolute's total voluntary repayments this year to $50 million. The early repayment reduces the RCF balance to $100 million, while Resolute retains the flexibility to withdraw funds to $250 million of the threshold up until the maturity date in March of 2023. And up next, shares of multi-commodity exploration firm Province Resources surged over 3% after it secured a license for a site. The company has received the first of its approvals for its high-energy green hydrogen project, with the license granted for a site north of Carnarvon. The approval permits the company to begin environmental and other on-ground projects studies on the site, and they're seeking a further land access approvals and negotiations which are underway with pastoralist traditional owners at the Western Australian government. And last on our list today, shares of Zoom2 Technologies made their debut on the ASX. The software as a service business has raised $8 million at an offer price of 20 cents in its IPO. Founded in 2014 by CEO Steve Orenstein, the company is an Australian-owned delivery platform that connects customers to a network of local drivers for fast deliveries. Since launching in 2014, Zoom2 has processed over 2 million deliveries, so they're off to a good start there. Well, that's a wrap in the mid-market pulse today, but stay tuned to Kalkine TV for more live trading market updates. Holly Shields signing off.